In order to scalp the 5-minute chart, you need to have a clear understanding of what you're looking for in the market. You also need to have a clear trading plan that outlines your entry and exit points. If you want to improve your 5-minute game, simplify your trading strategy. This will make it easier to buy and sell on any chart. How you approach your trading game will make all the difference. In this video, I'm going to show you how scalping the 5-minute chart is done with a simple trading strategy and will help you become more consistent with your trading. Now let's get into this. When we're here on Euro USD on the 5-minute chart, you can see price moving all over the place. We've talked about several ways to look for trading opportunities, but with this particular video, we'll cover 2 of them. And we're looking at voids, and we're also looking to get in when the market is trending, so you're just following the direction of price. Now you can see how price shot up here. At this point, you can see the strong push to the upside, pushing past this structure here. And when it came down, you could notice that it didn't close below this, so it was testing this area. So this could have been a potential opportunity for you. So we don't know if it's going to continue further down. We're just paying attention to what we see on the chart. That's all we're doing. Price came down. There may be another candle, we don't know. But what you would have done at this point, you would have been waiting for price to actually come back up to this area. So you can see how it pulled back, and it may continue, but you're going with the assumption that it's going to continue up because it broke this structure here. And if it comes back up to that area, you'd be entering a long position, and your stop loss would be somewhere here, or it could be here. It really doesn't matter where you put it. It's all going to depend on how you back test your system. Whatever strategy you use, just follow it through when you forward test it. Stick to the same set of rules. You also have to keep in mind too, now for this example, you can see there was a strong candle here. There's a good chance that there was some type of news event going on at that moment. Make sure that you take a look and confirm there's no high impact news coming out at that time. If when price does come into that area, if there was a news announcement, see how much time has passed since then when price does reach that area and what your current spreads are at. That might also be a factor telling you not to get in on the trade. When price continues to move up, you're following it along the way. Now, you can also see something really interesting here. We have this large void right there. We've talked about this in previous videos. This will be a potential area to watch for when price does return to it. You might want to get in on the trade. And when you're considering that, you would put your stop loss possibly below here, or you could drop it below the 50% if you're trying to be a little more aggressive. Oftentimes, though, you will see price come down a little bit. Sometimes though, it only just touches it and then it'll go back up. If we were to run this across and take a look and see where price will react to this, the interesting thing here you'll notice is look how it just came down, barely touched into it, and then decided to go up. Like I said, there's a few different ways to do this. So you could grab a fib tool if it's easier, and you can run it across when you're trying to set your stop loss and take profit. Well, you're entering in on the trade soon as it came and touched here, and your stop loss, like I said, it could be down here, or you could be a little more aggressive and put it closer and aiming for the high. And you can see, as this is an example, it's a 2.67 risk to reward. And there was nothing special here. All you were doing was waiting for price to return. So you were patiently waiting for a good trade opportunity. It came into it. As soon as it touched the area, you entered in on the trade. And as long as the risk to reward is decent, it's worth getting in on the trade. You need to decide how you're going to manage the trade as well. So if you move your stop loss to break even, once it gets to something like a 1-to-1, and you might take partials, you might take 25% of the trade off. Even if it comes back and hits your stop loss, you're still going to be slightly profitable, even though you didn't win the trade. This is what you need to backtest and make sure this is what you need to do. Now, when we're going through this as well, you can see how price decided to go up here. Now, you're not always going to get these because sometimes you're going to jump in on these trades and it's not going to work out for you because it depends what the market's doing. It's constantly changing. So any example I give you is always going to look different for when you're on the chart. You could see how price was going down and then it decided to shoot up. Here's a pullback. Now, you might have considered getting in on a trade as soon as it broke this area of structure again. So you're waiting for it to return. It comes up to that area. If we can just open this up a bit more for you. When it comes back up to this area, you would have considered getting in on the trade. And where you put your stop loss is going to be up to you because that's going to make the difference. And you may target the high here. And yeah, this is only a risk to reward of 1.59. So you could try to aim for a bigger target. It all depends on what your strategy is. But you could see this keeps repeating itself. And then eventually it changes direction. Price pulls back. You could have entered at this point. Stop loss just above and targeting the low. And this is only a 1.56, but once it reached a 1-to-1, you would have moved your stop loss to break even. So you can see how powerful this is if you manage your trade properly. You could see that price eventually started to change direction again. So made a lower low or high, and then it didn't push any further down. It decided to break structure and move to the upside. And at this point, you would have been looking for a trading opportunity. So price was pulling down. When price came back up to this area, which is this candle here, you would have been looking to get in on the trade. And where you decide to place your stop loss is up to you. You would have been, you could see that this right here isn't a very big risk to reward. So lots of examples that I show you, usually you're aiming for a 1-to-2 at least, and just take some of the trade off as it runs up. If it shows in your strategy, if it shows when you're back testing that it works for you. Now, as this goes farther, you can see too, while you got in on this one, price pulled back, and you're just paying attention to what the candles are doing. So price pulls back, it's testing this area. It's not going past it, it's respecting it. And when price went and pushed back up, this could have been a trading opportunity. Right at the high here, you're entering in on that candle. When it reaches there, your stop loss would have been below, and you would have been aiming for a 1-to-2. And this just keeps repeating itself over and over again. When it's trending, when it's in a nice tight trend like that, things can be great for you. But it's not always going to work well like this. So you have to keep that in mind when you're trading. Again, price changes direction. There's its first intention to come down. Price comes up. You're looking for an opportunity to get in on the trade here. When the price comes back down, you're looking for an opportunity to get in on the trade. Now, this is something you have to keep in mind as well. So when you're trying to aim for this, you can see that there's a void right here, right within this area. And you can see eventually what happened. Price ended up coming in and filling most of it. So your stop loss should definitely be above that. And you're trying to aim for at least a 1 to 2. You would have taken partials and moved your stop loss to break even if that's what you wanted to do. And if you did that, you would have gotten stopped out, but you still would have been profitable. There's so many different ways to do this. One of the best things you can do in order to become better is to practice. I know this seems obvious, but it's often overlooked. If you want to improve your skill set, you need to put in the time to practice. It can be helpful to set aside some time each day to focus on practicing, even if it's just 30 minutes. It can make a big difference. Learning to scalp is like any other skill. It takes time to develop. It's important to remember that you're not going to be an expert overnight. Start testing these strategies on TradingView and a demo account with any broker you are comfortable using. I just want to take a quick moment to say thank you to each and every one of you who watched, liked, and shared my videos. Your support means the world to me, and I appreciate each and every one of you. We'll leave it at that, and until next time, bye for now.